You know, what I really like about this is it's been dormant now for, roughly 6 years. That's a good sign. It's a big base formation. It's just now starting to break out. Really, you need to get it through 1400. But it tells us that from a monetary perspective, the Fed is probably in the right zone to maybe actually a little easier than what the commodity would otherwise tell you. We're not seeing it in copper. We're not seeing it in inflation. This is a very gold-centric issue, but it's a big base and a breakout. And for the first time in a long time, we actually like it at the margin.
Jeff, you said in one of your notes that it has already broken out in other currencies. I mean, is that purely a factor of the euro is weak, or does that actually suggest there's momentum behind it that's due now on the dollar side?
It's a little bit of both. It says that all currencies are weak, right, and that the central banks globally are probably easier than they should be. The Fed is tighter than those other central banks, which is why the dollar's stronger, but against the inelastic supply of gold relative, it looks a lot better. So.
We've also got second chart, something that's not particularly bullish. You're looking at the transports.
Yeah, so the transports, you would look at the transports and many of the industrials, particularly right here, when you look at the relative performance, which is rolling over. The absolute chart's okay. It's in a big range, but the relative performance is clearly weaker. So here's one of those where the market's telling us that there's weakness not only in the U.S. economy, but the global economy as per the transports, where gold is telling us that things from a monetary perspective are probably about at the right level, if not maybe a little easy. So I think we're on the verge, given what we're seeing in gold, to have a really good pop in some of these names, not necessarily transport, but things like the consumer discretionary spaces that look like they already have a tailwind to them that would just be supercharged with some type of monetary easing.
Wonder if a group like the transports is more sensitive to the trade headlines.
Well, I think so, Sarah, but, airlines look weak, which that's not a big deal. Rails actually look okay. Truckers, which is really domestic, look horrible. So it's a strange group. FedEx, UPS look really weak. So it's a strange group, but a lot of the big players that historically have a pretty good lead to the economy are substantially weaker.
Jeff's away from the charts. S&P closed 29.26 today. What are the key levels you're watching for the next?
Well, 29.55 is a big one, but I got to tell you, the 52-week highs expanded dramatically about a week and a half ago. It's happened a few times in the last 50 years. It tells us we're going to make new highs.
Okay, great stuff.